Hello, Internet friend. Today on Value Side, it's day 2 of how Wall Street sees the Iran war. I'm David Ravel. Well, Wall Street is on edge, especially for those directly responsible for the performance of various investment vehicles, from individual portfolios to funds of all kinds. Everything they thought they knew about the economy and future financial conditions now has to be rethought. Most of the street was shocked this weekend when President Donald Trump unilaterally decided to attack Iran. Everything changed. Most starkly, the energy picture has needed to be reconsidered. Iran blocking the Straits of Hormuz will have a profound effect on the Western world, and that effect will grow as the blockade continues. Energy prices will rise, helping oil companies and natural gas companies, but also contributing to higher inflation, a threat to fixed income. Now, the street immediately lowered its estimates of the Federal Reserve's further rate reductions in light of this inflation threat. We can see that President's actions completely gobsmacked Wall Street, as no sector of the market is rallying at the moment. Today, the entire market was sold. When in doubt, go to cash. And that's just what's happening. Wall Street will seek refuge in primarily U.S. Treasuries until the future becomes clearer. But to show you just how deep the jitters are, only the shortest term Treasuries have a bid. The street only wants to put out money for a few weeks, a sign of real concern on the part of money managers everywhere. Now, the most dramatic turnaround in Wall Street's outlook is in a normally docile group of stocks called basic materials. Basic materials, or the extraction of raw materials, are the first step in any industrial process. They're the companies that mine and refine earth products. Companies like Dow Chemical and Sherwin-Williams Paints fall into this group. Over the past year, these stocks have been the best performers in the market, rising on average 50%. It was Wall Street's play on President Trump's effort to reindustrialize the nation. Remember, that was one of the chief goals in promoting tariffs, to reshore industry. But for the first time in a year, all that thinking has to be reversed. Wall Street felt they were overextended, and yesterday began selling. The group was down almost 4% on Monday and over 5% today. Interestingly, gold and silver stocks are also part of this group, and they fell on news of the Iran war, something that is totally not expected. I can only surmise that this was profit-taking because precious metals are generally a haven during any war. Now, if basic materials were the most dramatic turnaround on day 2 of the Iran war, then the second most dramatic was the energy sector. For over a year now, we've been hearing the importance of bringing new energy sources of energy, principally to power our burgeoning artificial intelligence infrastructure. All those AI data centers suck up a tremendous amount of energy, and Wall Street was more than happy to supply capital to the energy companies that supply their needs. But not today. With the singular exception of coal companies, the rest of the energy sector saw a slight decline, as that cloud of uncertainty hung even over energy. Finally, a controversial comment. I've gotten more arguments over this one thought than almost anything else I might discuss. It's the plunge protection team. Or more properly, the President's Working Group on Financial Markets. This group includes the head of the Federal Reserve, the Treasury Secretary, the chair of the Securities and Exchange Commission, the chair of the Commodity Future Trading Commission, and together they are tasked with maintaining an orderly marketplace and preventing financial markets from declining precipitously. The group was formed back in the wake of the 1987 stock market crash. Now, you can imagine how politically charged their task is currently. Obviously, President Trump, or for that matter, any president, does not want one of his policies, like going to war, precipitating a market crash. So the plunge protection team may have to work overtime to prevent that. Today, beginning just 1 hour after markets opened, a sudden bid emerged, driving stocks higher and higher until the market closed. I'm just saying. Now, my advice to anyone, look behind that curtain. Avoid watching the indices and market averages that make up most market conversations. Look instead at individual stocks and sectors to see what's really happening in the financial markets currently. And that's trading day 2 of how Wall Street views the Iran war. I'm David Ravel. You can reach me at ValueSide, which is independently written and researched. The views expressed here are strictly my own.